Happy Monday and good morning, traders from Chicago. It is 8:02 a.m. Chicago time on the 25th of July, 2022. Thanks for joining me this morning on episode number 2279. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for the mic check. Here's what we're looking at this morning. Checking out the Convergent Trading pre-market summary sheet, we see that the market is in a mixed risk posture overnight so far. Everything is up, but only slightly. The S&P is up 14.5 points. We had some key number out of Germany. The DAX is up 30 points. The number was actually quite negative. As far as key earnings, Newmont Gold Corp pre-market came in and missed by 49%. Expected at 91 cents, came in at 46 cents on $3.05 billion of revenue. And in terms of that's really the major one, and they're not that big. For after the market, we have Whirlpool, Universal Health Services, NXP Semiconductors, and so on. Nothing really outstanding. The biggest piece this week is the biggest thing this week is FOMC on Wednesday. This morning, the economic releases, the key economic release was at 4 a.m. Eastern, 3 Central. The German IFO business climate for July came in at 88.6. This missed on expectations. Let's see. It missed on expectations. I think it beat slightly on current conditions. Let me look at that. Expectations actual 80.3 versus 80.3 versus 83 expected. Current conditions 97.7 versus 97.5 expected, and business climate actual came in at 88.6 versus 90.1. Again, a big miss. ECB's Kazakhs was speaking this morning, says that a big interest rate hike may not be over, causing the euro to pop higher this morning and driving that move higher at about 3:30 Central, 4:30 Eastern, and so we ended up pushing across the board higher. We've been stuck at this same range since then. ECB's Kazakhs had several remarks relating to rate hikes that the market kind of absorbed, repriced. That's really the gist of it. We got a minor number at 8:30 Eastern. Chicago's Fed National Activity Index missed by a lot, nothing major. I actually don't know what that number is. I haven't seen it before. Going forward, Dallas Fed Manufacturing Index, which does have some weight currently, and then the Bank of Japan Monetary Policy meeting minutes this evening. Turning our attention to the commodities, we see that crude, which had bottomed out this morning, crude hitting a low this morning of $93.01 has pushed up $3 and is trading basically near highs here. Near highs up 1.62%. This in sympathy with grains. Grains took a pop as the Russian forces attacked a major exporting port in Odessa, and the Russians later came out and said that they attacked military targets, that the export of grains, which is something that has been worked out, and the market is expecting the export of grains from the Ukraine would not be disrupted. Crude kind of moved with that news. Why is my inventory? Let's refresh. Overnight inventory is completely flat. That's not an error. Okay, turning to the S&P multi-distribution profile, actually a double distribution profile. 160,000 contracts traded, pretty light. 1% of the inventory is long, so it's pretty even. The distribution of volume below the prior close and above the prior close is pretty much the same. The range is 37.25 points, which is well in line. The point of control 39.8350, which has migrated up from 39.60, I believe, 39.60, and it popped to 83.50 about 10 minutes ago. That's it for the S&P. Taking a look at the S&P in a chart here, let's see what we've got. So on Friday, if you recall, and I posted this, I think, online, I posted that the expectation in the overnight session was, the expectation for the session is that it would tag 4016, and many of you might recall that I talked about the 4016 and a quarter throughout the week, that this is an area that is very likely to close. In fact, I read some comments that I made in the Convergent Trading Head Trader channel on Tuesday, I believe, where I had said that since it took out 39.60, there's just no reason for sellers to step in here without a news catalyst. And if that's the case, then it is likely to continue to float higher into 4016 and a quarter. And on Friday, we ended up pushing right into 4016 and a quarter on the dot before selling off, and we finished in a lower distribution. So Friday put in a double distribution profile. Let me switch this to yellow. A double distribution profile. So we had an upper distribution that we broke, and then we had an impulse continuation trade, and then we ended up holding a lower distribution into the close. Some of the artifacts that were left behind by Friday were that even though, overall the one-time framing up is untouched, it was unbreached. The price action showed a higher high, higher low on a daily, but it did not, the point of control remained at the upper end of the range, on Friday, and therefore value didn't actually move down. So despite the fact that we hit the 4016 and a quarter, closed the gap zone from sometime in June, late June, I guess, and we still held the value on the upper end of the range, and that's significant to remember. So as we sold off, it really didn't have all that much steam, and it ended up rallying just a little bit into the close. We show weakness below 39.80 to 86. There's some single prints there in the S&P. So let's turn to the TPO chart. So here's the 4016.25 is the low here, and then on Friday we pegged it and jumped lower. Let's zoom in a little bit. So we have a small string of singles right in here of 39.86 and a quarter is the top of the singles. The bottom of the singles actually goes all the way down to 39.8050. And you'll notice the overnight session had a high of 39.8875. And so to me, this looks like it is attempting to get into the upper distribution. It's attempting to get into the upper distribution, and it pushed up there on that news, both from the ECB, Russia, and so on. And but could not hold that upper distribution. So today is a struggle in the lower distribution from Friday. The one-time framing up ends at 39.4150. So if we breach a 39.4150, which is actually a relatively weak low, there's a one tick difference between the low and the next bracket on Friday's low. And to me, this if it takes it out, we're likely to push down quite quickly, right into the 39.20. The 39.09 becomes a magnet down below, and then we are basically back to bounce. We're in a price discovery mode or a rally mode. So we would be looking at pushing down into this area right in here, this fat area. This would represent the 09. So today, pretty lengthy profile from Friday, double distribution. If it escapes out of that Friday's range, it is likely to do so to the downside. So I'm looking for this thing to start turning over. Now that we've tested and closed the gap, we may have finished the work up top. We tested the 4,000. We tested the 40.16. This may need to advertise prices lower to bring in more buying for the next leg up. A key target above is around 4,200 or so. But to me, and again, I'm saying it, it's Monday. It's looking like it is likely to roll over. This is starting to shape up to be some topping action here, in my opinion. So if we look at the active chart, here's Friday. Pretty active morning on Friday, and then we push again. There it is, 40.16 and a quarter, and then we rolled over. And so having put in the IB and broken down on Friday, and having struggled to revisit that IB on Friday, to me, this looks weakish. So you could see that the IB was broken, a small retest of the IB right there. We remained ahead of VWAP, mid, full session, RTH mid, full session, RTH VWAP. We really had an okay bounce, but overall on Friday, we finished relatively weak. To me, this looks like it is likely to, today, it is likely to trade within the range. So it's likely to trade within the range of the overnight high 39.88 to the low of 39.41. Is it? I forget the number. 39.4150. It's likely to kind of be stuck in balance of this range, which brings us back to Thursday's lower distribution. So if we look at Thursday, so this is Friday. Here's the lower distribution. Here's the upper distribution. Thursday, here's the upper distribution. Here's the lower distribution. Wednesday, it's kind of an odd shape, okay? And then Tuesday was the rally day. So to me, it's likely to be stuck here, right in here. See this volume right here on the composite? Let's move this over a little bit. See this volume on the composite, the point of control for what's showing right here at 39.56 or so. This is likely to be the trap. So I'm expecting it to move back lower into the lower distribution on the open, and I'm expecting it to get stuck here and get choppy. And eventually I'm paying very close attention to that 41.50. If we take the 41.50, the one-time framing on a daily goes into neutral, which sets us up for a turn for a lower high, lower low, and then the following day triggers off one-time framing down, and this is why I'm saying I'm expecting this thing to roll over. The caveat, here's the catch. The catch is FOMC. The FOMC on Wednesday is likely to confirm the market's opinion and bet in the Fed fund rate futures that that they're likely to be aggressive. So To me, it's just if you look at the Fed Watch tool, it tells you what the market is expecting. Now, right now they're pricing in a low probability of a what is it, 75 basis point hike or something, but that could change dramatically as we come in. So coming into Wednesday, there's going to be something to reprice. So who knows? But to me, this looks like it is likely to pull back before the Fed starts. See this purple line here? It's very faint because I have it turned down. I have the cloud levels turned down. That becomes our target again. I'm going to remind you, it is 09. So today, this 56, 57 is in play again. 57 here is the magnet, the short-term magnet, but the big magnet is 39.09, and that's where I'm expecting the market to be probably before the FOMC on Wednesday. This is what it's indicating. Now, what it does, I'm going to trade what it does. I'm not going to trade what I think it should do or what I expect it to do. I have to look at the evidence as it is, and I have to change my mind and be able to pivot very quickly. As soon as I start to believe that I know what I'm talking about is exactly when the market will start to prove to me that I don't know what I'm talking about. Trust me, I have an ego just like everybody else, and the market has proven to me that I don't know what I'm talking about a lot. So it is really important to see that, hey, there's a strong potential, or it's probable, or it's likely, or it might. Keep using those words that open the door, to the fact that we are open to being wrong. Okay, so don't sit here and say, "Oh, the market's got to go. It's going to roll over. It must go down." If it must go down, then I must defend my position if I'm wrong, and I don't want to be in that position. I see that a lot online on FinTwit and various venues, that people somehow place a very strong opinion on the market, and I'm going to tell you that it's pretty impossible to make money that way. So to me, this is likely to push back. Let's go back to the active chart here. This is likely to push back and retest this right here. Okay, so I'm looking for a retest of this 65 area. We do have a very clear low volume node right at the mid and right at VWAP. This creates an interesting structure that we're coming into today. So does it come back and squeeze through that 69 into the 65 base and turn back up, and then resistance becomes 39.80, right back up here. The point of control at 83.50. So I'm expecting that it's likely to push here, consolidate, squeeze into the 65, come back, retest, and fill this area in. I expect it to fill this area in here early on with some volume, but then eventually it is likely to test up, and I'm expecting it to move down to 39.60. Once it trades out 39.60 for a bit, I'm looking for this 39.50 low, 51.50 low to be taken, 39.50 to be tested, and then it really, if the 39.50 doesn't hold, then I would be gunning for a break of the 41.50. Do you follow that plan? That's what I'm expecting today. So let's take a look at what that looks like. So the primary scenario, and I don't know what, I hate the way they change these colors now. Primary scenario, open auction in range of yesterday, double distribution. I'm looking for it to make a quick whipsaw this morning, but I'm looking for it to drop into the 69. Look like it's going to hold the 69, but then push into the 65 down here like I drew earlier. 65, turn back up, find resistance on whatever structure created up here. So might find resistance somewhere in here, the 73 or so, but I'm expecting it to fall into 60, consolidate, test the 50, and if it can't hold the 50, then we are likely to push down later in the session. And so my bias this morning is to look for weakness on pullbacks higher to short. And that all breaks if scenario 2 kicks in. And scenario 2, and again, they've made it so that I can't select colors like I used to. I have to guess what the color is. Secondary scenario is an open auction again. And then what happens with the open auction is it pulls back to the 69, potentially 65. Look for that impulse. That's going to be key. If we push and we test the ground beneath us, then the market, what it does is it tends to jump from there. That 65 might act like a trampoline or a coil from which to launch. If we do get an impulse up, and that's what this supposed arrow is for, and we get back into the open, then very quickly we might see the 83.50 and the overnight stat at 39.88, and then this whole idea gets refuted, and we are likely to head into the point of control that we put in on Friday, which is 39.97.75. So if it decides to push higher, 39.97.75 becomes the equilibrium price or the most valuable price up here, and then another test of the double O. I'm way off the chart here. The double O, and that'll be scenario 2. So in either case, we're likely to move pretty aggressively out of here. Hey, it may be that we don't go anywhere. I mean, it's a summer Monday, okay? There's not too much of a catalyst here unless the news feed comes up with something. But overall, these are the key areas. So I'm on the open, I'm looking for how does it facilitate rotation? In other words, how easily does it rotate down? And if it rotates down easily, that's one clue, but it might rotate up easily as well. So what I need to see is it rotates down easily and then it has a hard time regaining those higher prices. Then I'm looking short into 65, and I'm looking for the break through 60, into 50, into 41.50, and then it could run. Remember, the big target's 39.09, not for today, but that's the equilibrium price for this region is 39.09. I'm expecting it down there. 39.09 is the equilibrium price. So any movement down is likely to check the 39.09. Any movement up is likely to check that 14.16 and a quarter. If it takes out the 14.16 and a quarter, by the way, it can run quite a ways. It has a lot of runway because the way that was created, let me show you that in a second here. The way that 14.16 and a quarter was created, let's zoom out. Look at that. The way that 40.16 and a quarter was created was on a sell-off, an incomplete sell-off, which gave us that gap zone we filled in on Friday. So if we take out the 40.16, we're going up the flagpole. And what's important up here? 72, 73. This is major. If we get up here, we have a high, we have multiple lows in the 72, 73 area. And that's the beginning of the sell-off and the end of the single print. So if it takes out the 40.16, boop, we have about 60 points of range on poor structure to the upside. That's what we have. I'm not expecting that. I am expecting it to struggle and to stay down here in the 90 to 50 range for today. We'll see how it goes. One thing I wanted to make you aware of is that, wow. All right, let's mute this. Nice music. On Wednesday, we have the FOMC Futures Radio Show, which is sponsored by EdgeClear, which is the brokerage that I own, is hosting Chai Girl, and Mayhem, and a bunch of macro people. This discussion is going to be very interesting. It's occurring at 12 Eastern. The number, the FOMC release is at 2 Eastern. It's occurring at 12 Eastern. 11 o'clock, they shut off the the signups for the giveaway. To participate in the giveaway, you go to edgeclear.com/deli. There are about $6,300 worth of giveaways from News Squawk. News Squawk is is the news service that I use, the main news service that I use. News Squawk covers macro, major stocks, and this is for the multi-asset channel. It's quite a big giveaway. It's like the grand prize is a year free of the multi-asset channel, which is a flagship channel. You can go and register to qualify for that giveaway at edgeclear.com/deli, and then tune in at 12 o'clock Eastern on Wednesday to the FOMC panel to see how these traders are looking at the Fed decision for that day and how they might trade it. Anyway, just wanted you to know about that, edgeclear.com/deli. It's also in your YouTube live chat. That's it. That's all I have for you for today. Good luck, and I'll catch you tomorrow morning. Take care.